Welcome to our how to read stocks for dummies tutorial. Now, I didn't want to name it out, but my team suggested I do because that's what most of you are searching for on Google and on YouTube. Most of the times, I do not like using these crazy titles, but as well, my team told me there's a lot of garbage out there. So at least if the individuals click on your content, they are going to get value. So let's get right into it. Today we are going to be using General Motors. So what does it mean for what does open mean? We are going to be using the mobile app. We are going to be using the default stock mobile app on your Apple. So I didn't want to go through on my computer because majority of you are just beginners and you might not be able to navigate your way through Yahoo Finance and all other esoteric platforms. So it is more convenient for you to go to your Apple store or go to your phone, download the stock app. It's already in your default for majority of you, but it is more convenient for us to use the stock app because it's easy and it's well accessible to all of you. So let's get right into it. The first thing we are going to be looking at is open of the General Motors stock. So at the time of this recording, this is 187.65 cents. So this is the dollar amount the stock started trading at the beginning of today. High 187.99 cents. So this is the highest the stock has traded for since today. So the difference between uh this high and the open is just a matter of cents. So low is 184.28 cents. So the lowest this stock has traded for. Notice the price are fluctuating because that's how markets move. This is the kind of fluctuation traders take advantage of in order to make profit. And you might say to yourself, how does zero point 0 cents make anyone profit? Well, if you're able to compound out to a large enough, you're able to hedge against that with a large enough capital, it becomes a significant amount over time. So 52 weeks, no, volume. So volume is 4.729 million. So the volume means how many of these shares trade, how many of these shares have been traded. So it's very important to look at volume whenever you want to purchase a stock. You understand whether that stock is liquid. So even though the price skyrockets, you are able to exit that position. So if you see a stock that is less than 100,000, then do not buy it. So basically this 4.729 is not just amount of the stocks, that individual stock that have been trading, is the money amount, the integer amount. So 4.729 million dollars has been made by trading General Electric stocks. Does that make sense? So price to earning ratio. Price to earning ratio is a kind of intermediate concept, but I'll try to give a concise explanation. So the price to earning ratio is 50.37 at the time of this recording. What this means is the price to the earnings, how much investors are willing to bid this stock, or how much they are able to, or they are willing to pay for this stock in order to gain exposure. So at this point, they are willing to pay 50 times the initial price in order to get exposure to this stock. Market cap. Market cap is $201.9 billion. This B indicates billion dollars. If it was an M, it means $1 million. So market cap is just a fancy way of saying how much the company is worth. Don't let this esoteric concept fool you. That's all it is. So in order to get this market cap, you're going to multiply how much the share costs by the total amount of shares in holdings. 52 weeks high, 187.99 cents. So the highest this stock has traded for the year since January 1st. The highest this stock has traded for over 52 weeks is 187.99 cents. So 52 weeks low 84.22 cents. So this is the lowest the stock has traded since January 1st or since the year begun. Average volume is the 5.306 million. So this is the place where you can use share number. So 5 million has been traded every day on average. So 5 million has been traded on average. So you can see that this stock is liquid. So even if the price skyrockets, as you can see from the 52 weeks low, it jumps from 84 cents to 187 cents. So you are able to exit your position and take profits. The next one is the yield. The yield is 0.60%. Another intermediate concept, but basically what it means is the percentage points you get against how much GE stocks you buy. So if you buy $200 worth of GE, you're going to get a 0.06% yield on that. Beta is a very intermediate concept, but let me give you a highlight to what it means. So beta basically, this has a beta of 1.18. So basically what it means is how volatile this stock is against this S&P 500, against the market. So the market is basically the S&P 500. S&P 500 is the global standard of how the US economy is performing. So this beta is the standard to how much or to how volatile this stock is against the US standard market. So the company start off by having a beta of 0. So if a company has a beta of 2, that means on average it swings downwards twice as fast as the S&P 500. So if there's a day the S&P 500 is not performing, it's going to be underperformed twice. So if the S&P 500 tanks by 20%, your stock is going to tank by 40%. But if it goes up by 20%, your stock is going to go up by 40% as well. So earnings per share is $3.76. Again, this is another intermediate concept, but what it basically means is how much you earn for every single share. You earn the net earnings for every single share. This is not how much they'll give you, because this is when people make mistake. They take the earnings per share figure, multiply it across how many shares they own, and when it comes to the time where they're supposed to receive their dividends, and not all company pays dividend, but this is just one of the companies, when it's time to receive their dividends, they receive something significantly less from what they got from their calculation. This is because it's your net earnings. Net earnings means the profits or other operation expenses have not been subtracted. So basically, I don't know why they did not call it gross earnings, but okay, yeah, I'm the one making the mistake. So yeah, your earnings. This is just the earnings per share. This is not the net earnings per share, because operational expenses has not been subtracted. Yeah, so this is everything. So let's move to this charts. This candlestick thing you see. So if you brush across, there's something called 1D. It just basically means 1 day ago, how the stock is performing. So if you brush your hand across this chart, you see how the price of the stock and how it has been doing by the day, and to give you times. If you click on 1 week shows you how the price of the stock, what happens, the price movement, what happens during that week. So you can see the price, the time, and everything that happened. The year to date, YTD basically means year to date. So how the stock has been performing from January 1st, from the year up until this point. I'm sure most of you will be confused and say, if you look at this year to date, it says $100 at the beginning, but if you look at your 52 weeks high or 52 weeks low, it says 84.22 cents. How does this correlate? It correlates because we are 52 weeks low. We have not gotten to the end of the year. So 52 weeks is still eating into the previous year. So that's where that figure came from. while YTD is basically year to date from January 1st to up until the point of the usage of that metric. So this is all there is to know on how to read stock quote for dummies. As always, if you found this helpful, check out our stock playlist platforms. It will help you go from stock from zero to hero, basically from novice to mastery. So you learn and understand the fundamentals of stock trading, stock investing for beginners. As always, pleasure speaking to you. I'll see you in the next one.